Hi, Warriors. Let's have a great week. Paul Penman, how are you? Michael Weissman, Mike Bergman, how are you? AJ, Ryan, everyone doing okay and ready?
Yeah, morning, Dale. How you doing?
Good. You ready, Ryan? You've
Ready
probably
to rock
been
and
ready
roll.
for hours.
Yeah, Blake's off. Where are we going? Straight down the pub?
Yeah, I think that EG is doing something significant. That's a daily, and it's been trying to turn here. I think we could be getting a turn. We get through 620. I think we have 87.40 in it. We'll see. Maybe that was a buy in the euro on Friday, 8.5. I didn't do it. I thought maybe we'd get 108, some follow through, but that's not happening. Pound important support is still holding. And want to ask you and Kman about what's happening in yen. Came very close to getting stopped out Friday on the news. I forgot what the news was. It was weak in Europe and probably better here. There's talk of intervention that might be around the corner in the yen. We were up here last time, before it topped, we were intervening around here. What do you think?
It's gaining a bit of momentum on the rhetoric front. We're just waiting for the final two keywords sort of thing to come in, things like speculation and not moving in line with fundamentals and that sort of thing. Definitely a step up. Of course, this time it's much, much different because obviously dollar yen is rallying, but without the dollar side really in the mix like it was last year.
Okay.
So if you look at dollar yen, it's obviously not as high as those highs we had.
There you go.
We were shooting up to 152.
Right.
But if you look at the crosses, particularly things like euro yen, pound yen, they're well above where we were when we hit those highs in yen. So it's really more a yen story than a two-way story.
Okay. Dollar weakness has helped that the crosses though too, right? I mean, we've had a strong cable against the dollar for a while, right? And euro. So
again, you look at that's the difference. You look at those September October lows when dollar yen was hitting those highs. You can tell it's all dollar. Well, now we're heading the same way in dollar yen, but the euro, dollar, and cable are now much higher.
Great point. So, okay. All right. So, do you have a feel on this euro pound? I mean, do you think we've tested this 127 level and the cable looks pretty key to me to not close underneath it? We're starting to get a little bit of a wick again. So, this looks pretty important. I wouldn't want to be long cable. Like you could be long cable against today's lows, but the preferred long for me would be euro because of EG. And just wondering if this holds, then the dollar might be ready to give it all back. Maybe this was just ABC and now the dollar's going to sell off. And, one thing that Stella and I talked about last week were yields, and they tried again on the upside. And now they're just trying to hold this moving average here at 370. But, the path looks like there have been several attempts, several rallies that yields could be on their way lower and under 360 sharply lower, especially under 330. So look, it's hanging on by a thread on I think that's the 200 right there. So, and bonds are trying to turn up the longer term, long end of the market. This 104 is very important in TLT. And with the yen coming off, of course, we're getting a nice pop in the metals. I bought silver right around 22.40 last week and survived the stop. So that's shaping up. They're due for at least bear market rally. And gold, Friday before it exploded, I said it could be a false breakdown, and then it gave it all up. But here we are again. So this looks like an important pivot in gold. I think we could get to 1960, 1980 if the yen cooperates and pulls back to 38 or so.
Yeah. I think you can get there anyway, whatever the yen does.
Yeah. So new highs I was thinking of you when I saw this. So we got over, 730. Still long this?
Yep, still long, still chopping and slicing and dicing. Had a little move above 24. If we get above 25, I'm going to start really pulling the stops up, because then I think we're getting towards the types of levels where they might get a bit stronger on the jawboning.
About stimulus? Or
no, just about the level of the currency. You can see it's been a pretty much one-way trade for the last 2 months.
Yes.
But also, if you've got to look at the other things as well. If Japan does intervene, that could get a knock on the head as well.
Right.
So there's a few angles. If it goes high, you need to start protecting your position from.
If the dollar continues higher, I'm going to be pretty interested to see what Aussie does, because it was a weak sister. It had the most negative action in the last week. So I think this 68 level is going to be important if it could rally back up to 68. And if the dollar makes new lows, we take out these recent lows, and it can't make a new high over, that last week's high, that'd be even a bigger market tell. And then the only other thing that's a pretty big feature is we are back inside the throwover on the S&Ps. If things had gone differently in Russia, we'd probably be down sharply. I was a little disappointed. What's his name, turned around and canceled it. I want to ask you guys, what do you make of it? It was, stranger than fiction.
Yeah, very strange situation, isn't it?
Yeah.
Prigozhin, whatever his name is.
Yeah, that's
1 minute he's marching to the doors of the Kremlin, and the next minute he's running off to apparently Belarus, which doesn't sound too hot, considering they've just been delivered a load of tactical nukes.
That's the first thing that came to my mind.
Yeah. So as we were saying on the Flow show, is it better the devil in Putin than getting some other loon in the hot seat? But I don't. Yeah. They're still investigating him, and it's just a very, very strange situation. Doesn't scream confidence in the leader, does it?
Yeah. No, I guess. Yeah. Is that you, Steve?
That is me. A Russian friend of mine was telling me yesterday. I was talking with him Saturday morning and yesterday early night about it, and he was telling me that it was never Prigozhin's intention to actually march all the way to Moscow and overtake Putin, etc. He was telling me that his problem and what he wanted to do is get rid of the bureaucracy that was standing between the troops and Putin. That his goal was this, because they had been isolated in essence for months now from leadership. Now, of course, who knows what else happened under the table, right? There's a lot of speculation.
Well, he didn't want his men to sign a contract with the military so that they would be under, everyone else had to sign that. And he was the only one that said no to submit its troops under the leadership.
As I said, there are underlying causes and issues there, and who knows how many of those we know. The point, though, and what is important is that this is over. I mean, it started once the week was over and the weekend began, and it was over before the weekend was over. So for the time being, it's a non-event. I mean, doesn't it leave something behind? It does. And in my opinion, what it leaves behind is that, first of all, it shows that the king is naked, right?
Yeah, the emperor has no clothes.
Yeah, the emperor has no clothes. And in this case, I mean, even when Prigozhin was marching towards Moscow, there were very few people that would even make a statement. For him, he had to leave Moscow and go to St. Petersburg.
Yeah, they all fled. Yeah.
Yeah, which shows that perhaps current Russia is not far away from all the problems that Soviet Union faced that led to the dissemination of it literally 32 years ago now, 33 years ago. So I think the whole concept that Russia is the second biggest military power, yes, they do have the nukes, obviously, there's no question about that. But other than that, what I see is a country that, from a military perspective, is mostly in disarray than anything else. And obviously, Putin has a lot less backing than he used to. And I think we have elections in a year again. So it's going to be interesting to see what's going to happen. Is he going to run for it? If he runs, will he be elected? Who knows?
Okay. All right. So just a non-event and just theater. Unless, I've heard interpretations that, okay, now he's in Belarus and that this could set up maybe another pincer action. Maybe that he wanted him there. I mean, why did he choose Belarus? Or how about Lukashenko is a pretty unstable leader. Putin's had to bail him out.
He's been mates with him for 20, 30 years.
Yeah.
Lukashenko.
Yeah.
That's
so
been said anyway. That's
maybe. Yeah, I would be open to interpretations that all this is part of a grand plan, a grand scheme from Putin.
Yeah.
If this whole thing didn't, in essence, involve Putin showing terrible weakness in many different ways.
By fleeing? If he had stayed
there. By fleeing, by losing control, because before anything else happened, he lost control, right?
Yeah.
B, by fleeing. C, by getting very, very little backing as long as the situation was still fluid. So once the situation was fluid, the vast majority of generals, etc., refrained from even making a statement. So that shows that there were a lot of people that were waiting to see which direction things are going to go.
Yeah.
So,
also, it's not Putin's style to just give him a pass.
Exactly.
After calling him a traitor.
Exactly. And imagine you first call him a traitor, and then you give him a pass. Also, sign of weakness and capitulation, right? Okay. So, people that govern in a way that Putin has for like 25 years, they are counting on people being scared of them. So I don't think that what happened could have been part of a major plan, because I think that Putin came out of the whole charade a lot weaker than he was until Friday.
Okay. Anything market related that you want to share with us, Steve? You haven't seen your charts in a long time.
Yeah,
if you want to share and so that we know what you're keeping an eye on for this week, that I know you wait for a lot of confirmations. Maybe there's a couple things that
first of all, this has been a tough market lately, right? And the biggest reason is, of course, the question marks that we have having to do with the future monetary policy, meaning, okay, have we paused? Have we really topped? Is it a temporary pause? Are we going to be hiking more? How long will rates stay up here? Still, the whole market is hoping for a pivot from the Fed. On the other hand, the market doesn't want to see some kind of a big recession, because even if the Fed pivots and if we have a big recession, that's not going to be positive for stocks. And the most instrumental piece of the puzzle having to do with the markets are yields at the moment, right? And what are yields doing? They've been trapped in this. If we're talking about the 10-year yields, they've been trapped in this range between 360 and 385. We're currently more or less in the middle of that range. We've been stuck here for, what is it? It has to be more than a month. Yeah, it actually is 18th of May. So yeah, it's like 5+ weeks that we've been trapped in this range. And until yields break in one direction or the other, we really, can't tell with certainty where we're heading towards. Now, in general, I believe that there is a good chance we've seen the high in yields. That doesn't prevent yields from having a temporary break higher, although I do believe that the chances are higher for a move to the downside. Nevertheless, technically speaking, we have to see a breakthrough 360, and then and only then we really open the downside, with 330 being next. So one important element is this, yields, and yields are stuck. Now, the other one, and we've already talked about it, is the yen. The yen has been very weak. Despite yields doing nothing, the yen has been moving higher and higher. Ryan was saying before that there is a chance for an intervention, and the market might start looking for one. Who knows what the exact intentions of the BOJ are? Nevertheless, technically speaking, we've had a bullish breakout here, and that is all that matters. So USD yen moving to the upside, and in general, the yen pairs have been on a tear. Euro yen, pound yen, you name it. Right. Now, in my opinion, the pullback that we've been seeing in equities, until proven otherwise, is corrective. Right. We've had the S&P since it actually bottomed out in October. We've had the S&P having only two types of behaviors: one, moving higher; two, correcting lower. But corrections have always been in a very clear pattern. Sometimes it is a descending channel, sometimes it's a horizontal consolidation, but in all cases, since we bottomed in October, we've seen corrections really having clear corrective characteristics, as the last one that we had, which was this expanding triangle. We broke through that. We've had some nice impulsive action to the upside. What have we been seeing now during the past 6-7 days? A clear, orderly pullback. I mean, it has literally taken, like 8-9 trading days to retrace just the last couple of days of this bull move, right? So when you see one direction of the market going up with the elevator and the other direction of the market is going slowly down using the staircase, you know where the trend is.
What would change that for back under 4,200? Would that change the picture for you?
To begin with, this confluence of supports at 4,300 is the first area of support, right? Okay. So yeah, before anything else, 4,300 is support. And in my opinion, as long as we trade above 4,300, there can't be even a discussion about possible bearish outcomes. It's extremely premature to even consider anything like that. Yeah, if somebody is constantly looking for reversals, the vast majority of the times he or she is going to be wrong and going to be losing money. It's not coincidental that the vast majority of mature and successful investors are trying to trade with the trend, right? Right. Yeah. Because when you do have a trend, and we've had now a medium-term trend since October, trying to constantly fight it is something that will have lost you a lot more money than will have made you.
Let me ask you this, though.
Yes.
At this chart that you see right here, show me where it's been impulsive since October.
First of all, the last move has been rather strong, right?
Okay, the last move.
This part of
But-
the move has been
But
rather
go
strong.
back 6 months. Is there anything impulsive about the way we traded from the lows?
There isn't a strong impulse here, but let me reverse the question for you. Which moves have been stronger since October? The moves to the upside or the moves to the downside?
Well, it was a tie until we took out 4,200. We had a
Um,
couple of decent corrections there, back to 3,800.
let's, I think that's quite a. I don't think that even is accurate. Yes, once we took 4,200, we really went into a different gear. There's no
Right.
question about it. There was a lot of skepticism, and I said since the early days of this bull market that, in my opinion, the biggest danger for this move to extend was that there was a lot of
Shorts.
a lot of shorts, first of all, and second of all, a lot of disbelief in this move. And we've seen that happen in the past, right?
Yeah.
When market participants are really not convinced about something, that means they stay sidelined. But that results in the following: that if this move continues, then you slowly start having some of the people that were sidelined thinking to themselves, you know something, I need to deploy some of my money in the market, which means that there is more money to propel this move higher. And probably 4,200, as you said, was a very important level, because we did see the move become more impulsive once we broke through it. But oppositely, as I said, look at the last what is it, like 7-8 days of price action. Does this look like a bear market to you?
No.
Or the beginning of a bearish move? It doesn't look to me either.
Well, under the first sign for me was if we close under 43.40. But yeah, it's going to have to do something to the downside to change it. I have this, if you draw this line, what do you have there?
The VIX.
Oh yeah, the VIX. Okay, yeah,
because
that's amazing.
Because the VIX.
What's the DSI on it now? -5.
Yeah, it has rebounded a little bit. The DSI was low, but sometimes it's important to see correlated or related markets. The VIX obviously is
So
a product.
we're back to where we were before the market topped in 21, aren't we?
The thing is the
If you
following
go
I think is very important, is that during the past couple of weeks, we've traded several times in lows that we hadn't seen since 2020.
Yeah, since before the top.
Yes. Yeah. So basically, my point is,
with the market being still 400 handles lower. So what do you make out of that? The exceptional complacency?
In general, to begin, every coin has two sides, right? What I've said, once we saw the VIX plunging to new lows, and so far I've been on the right side, is that when you see a market moving to levels that it hasn't moved into for years, generally that is not an indication that you should be fighting that market. So the VIX hitting new multi-year lows was another indication for me that we shouldn't be fighting the strength in equities, right? And for the time being, that's how it's been. Even during the past 7-8 days that we've seen the S&P and the rest of the indices pull back, if you notice, the jump in the VIX has been very contained, right? Yeah. Extremely contained. Now, of course, somebody can say, as you just said, that this might actually show extreme complacency. But on the other hand, as I said before, instead of trying to question the trend at every occasion, I'd rather stick with it until proven otherwise. And for the time being, all the technical information I have in front of my eyes, how the S&P has pulled back, how the rest of the indices have pulled back, the fact that a lot of other indices have been hitting either new multi-year highs or new all-time highs. The DAX just several days ago reached a new all-time high with that 16,421
Look at
high
the divergent. I see
yeah,
you're
yeah,
noticing
no,
the
no, no, no.
divergent.
Absolutely.
And hasn't the pullback in the DAX been a little bit more severe than S&Ps?
Yes, it has, and we're now approaching a rather interesting level of support from which we rebounded earlier today. And I'm referring to this 38.2 you see there at 15,690. Why is that? Because we tested that level several times on our way up in the short-term pullbacks that we had. Second of all, it's the 38.2 of this last leg higher, the leg that began from the 14,506 low to the 16,421 all-time high. Right.
So perhaps just like NASDAQ led the way up in the U.S., European stocks have been outperforming U.S. stocks.
Yes, they have been outperforming actually for many months.
Yeah.
Right.
So maybe they lead the way down.
Let's see. For the time being,
all right. Come on.
For the time being, even for the DAX, yes, I know. I mean, I've drawn myself here in ascending wedge, as you say.
Yeah.
Now, having drawn an ascending wedge doesn't mean that this is necessarily an ascending wedge. I'm just always drawing on my charts possibilities, right?
I thought Jason drew that channel.
No.
All right.
But for the time being, have we broken the sequence of higher lows? No. That's why I consider, for example, here in the DAX, this 15,690 level to be rather important, right? Because it will also, if we move through this to the downside, it will also break the shorter term sequence of higher lows, right? Okay. In any case, though, if you choose to err in one direction, you'd rather err in the direction of sticking with the trend a little bit longer than the opposite direction, as I said before, which is trying to assume that every counter trend move is the beginning of a new trend.
Okay. All right.
I agree with Steve, by the way.
Oh, you're back. Okay.
I'm back.
All right.
Welcome back, Stelio.
All right. Before we get to the guests, I want to hear from Kman if he's still around and what he's looking for this week.
I'm sorry, Dale, I fell asleep. Good morning.
Oh, okay. Well, welcome. Good morning to you.
Well, first of all, I want to say just one thing about those stock markets. If you look at the return you get on the reserve repo, and if you look at the return you get in money market instruments, and if you look at the moves that we saw in S&P and in the other indices, if you are a big money manager and the stock market, and you are sitting on a bag of cash, because as was rightly said a couple of times, no one believed that the stock markets could really go higher because everybody was looking at a recession. But if stock markets start to go higher than what your models are telling you that you can get in money market instruments, if the equity market goes higher, they have to deploy cash, as Steve said. They just have to, because that's what their models are saying. And that's one of the reasons why we are here, because there was just not enough investments in the equity markets over the past months. Now, the other thing that I wanted to note this week is that we are, of course, end of month week, but also end of quarter, end of semi-fiscal year end in a good part of the world, and end of fiscal year end in Australia. So I expect quite a few moves this week to develop, and basically my findings, and confirmed by one of the major banks, not the one that I would like to see confirm it, but we should perhaps see a bit of dollar weakness in the second half of the week, perhaps once Wednesday is over. Perhaps then we are going to see some decent moves, and I think we have already seen a couple of them just in the European market, FX market this morning, with the euro process being quite well bid as well. So that may hint at some activity there as well. So this week we can see a lot of moves that come a bit out of the blue, and we should be prepared for those.
Okay, that pullback in euro to 108.5, you think that was enough for us to have a continuation higher to challenge the highs over 110?
If my findings on on market moves are on what we should see this week are correct, it may look as if it was enough, because we may, perhaps barring Wednesday, as I said, we may perhaps end the week a bit higher in the euro, but then we start a new month next month, and then all options are open, because if we look at, for instance, German data, they are on a slippery slope. But sometimes, you know, flows dominate what we think, so they overpower what we may think. So
flows are more important than fundamentals in the short term.
In the short
long term, of course, fundamentals will always act like gravity. Right?
Yeah, that's why I'm saying I'm going to be pretty cautious with the euro this week. But I think starting next week, if we see more data coming out on the weak side, but the price action due to these flows being on the other side, then I think towards the end of the week we're going perhaps to find some quite interesting trades for going into July.
Okay, I appreciate that, Kman, and thanks for waking up.
Who do we have today, Dale?
We have Gary Kaltman, and Gary is I think you just moved him there. Did you? He was there a second ago.
No, I didn't move anybody.
Huh?
Let me look for him.
There he is now. There he is again. Gary Kaltman. Hi, Gary. I'm going to try and promote you now. Whoops. See it? K-A-L, first name Gary, G-A-R-Y.
Yeah. I'll promote him to panelist.
Okay. Thanks, Steve.
My pleasure. He also needs to accept, of course. I've already sent him. There he is.
Good morning, Gary.
Perfect. Enjoy the interview, Dale.
Thank you, Steve.
Unmute.
Now you're good. And you're going to be on Spotify now too. All the interviews are going on Spotify and Apple.
Can you see my chart?
No, you didn't share yet. You got to click the share screen underneath. Scroll at the bottom, and you'll see the green box.
Share screen.
Yep.
We got a winner.
Okay, so are we in a new bull market, Gary?
Some areas yes, some areas no. I'm a big believer in the markets. The whole market's never going one way. I'm going to show you what I have the radio show 5 days a week. I have this consulting business. What I try to do, there are a few things Bill O'Neill once said to me the first time I met him. And number one was, if you can avoid the bad areas and bear markets, you're going to be ahead of 99.9999%. So there's definitely bull markets in semiconductors. Here's your Oracle that's up there. A lot of the tech areas, but there are bear markets that need to be avoided. And I'm really worried about financials right now. I don't know.
Yeah, the banks look lousy. Even Goldman, Gary, some of the best of breeds. I'm telling people don't bank on the banks.
Yeah, let me bring something up real quick. As you know, I'm one of the biggest complainers about Jay Powell and the Fed and their constant interference with free markets, the ability of investors, traders, and speculators to do their thing at a certain time at a certain price without him interfering. And you know what he did with the 0% rates and the 9 trillion, distorted the whole freaking bond market, which the main reason I believe inflation showed up was that. What you saw was the distortions in the regional banks having to go out long to make any money. Austria did a 100-year bond and was able to do it at 0.8%. So once the inflation came and the real market, once he stopped printing, interest rates started going higher. He sat there and what did they say? There's no inflation. Then they said it was transitory. Then they slow walked it and then they played catch up. And so they were way behind, causing all kinds of problems. My biggest worry right now, and we're just talking fundamental before technicals, is that they are now way behind the other way. The 10-year yield that's 3.685 this morning, he's basically telegraphed and guaranteed 5.5, 5 3/4. Again, not listening to the market. And I'm just wondering if the banks are reflecting that. I'm not sure. All I know is I'm just going to throw one up there. If I can figure it out, there you go.
I mean, the
Just say-
XLF and the KRE don't look much different to me,
Right.
except the magnitude of the initial drop.
Right.
Otherwise, they're identical.
I'm showing here this is Bank America. This
Yeah.
is a huge bank. And supposedly we're away from the banking troubles. And then I look at this and it's like a holy crap, what's going on here? So I just keep this in the file manager. The only thing I owned, look at JP Morgan versus Bank America, but I sold JP Morgan, I believe on Thursday with $1 loss because I was hoping it would break out and never did.
Okay.
So
Good
that
discipline.
discipline. When wrong, be wrong fast, be wrong small. It's a simple rule that keeps you out of big trouble. So real quickly, if you don't mind, here's China, the FXI,
Yeah.
and you can go through a heck of a lot of names under that umbrella, which are just pretty much, you know, bearish phases.
Baba looks the same.
Oh, it's
Yeah.
you can go through. You know, I'm bearish on gold. There's the gold miners. That's not hard to figure out. And just a whole host of names and areas that I still think you got to be very careful about, and just, you know, stay very focused right now, because it is the old line, a tale of two cities.
Yeah, it's
There's just-
bifurcated like crazy. I've never seen this much bifurcation.
and the bifurcation.
Who wins the day? Who wins out the day, though, Gary? If these banks are going to new lows, is the market, even tech, going to be able to ignore that?
Well, I can tell you, before June 2nd, it was so narrow. My thought process was, oh, the normality is going to be the tech is going to join the rest. And then we had the NVIDIA thing on, you know, May 25th, and these things just went vertical. Some of them are now finally normalizing a little bit, but I still think the tech and the semis and the NASDAQ and NASDAQ 100 so far, normal as normal can be on the pullback. I can tell you that a week and change ago, you had the Daily Mail. It's a United Kingdom kind of celebrity newspaper with normal news worldwide. They had a big article on the big 8 tech stocks. And I'm like,
Wow.
Wait a minute, they're reporting the news now? And then a certain famous somebody called them the Magnificent Seven. And then Barron's had the bull cover. So I'm just on notice. The only things I've really owned is the big tech and NVIDIA. There really hasn't been a reason for me to go much elsewhere.
How about Apple's at new all-time highs too?
Apple's my biggest position right now. And as I say, just ride the trend, and you can see the green, the 21-day has held it and contained it.
Are you
since
out
March.
under 180? Are you out under 180?
If it breaks the green, see ya.
Okay, got you. All right.
Sometimes it's pretty simple that the lines just draw up very well for you. And we'll know a hell of a lot more if an Apple takes that out. Some of these big leaders that have been very strong, Meta takes it out, which has been strong.
These are like the nifty 50.
Oh, yeah. Other things, just real quickly, not thrilled with the EEM, what it did in the last few days. Europe's been under more pressure. I don't have the chart of the London FTSE, but that looks pretty ugly.
How about the Nikkei? That's really been the parabolic star. You have any view on that?
My only worry is it kind of went vertical, and sometimes that's climactic. And then I look underneath and I see Sony really breaking badly in the last few days. So I'm not willing to call it a day, but just I'd be a little bit more wary. Then again, let's see, Honda, just a little too much vertical, a little Eiffel Tower-ish. So let's see how they pull them back. So far they're normal, except they feel a little bit frothy at the top. Pardon?
Bubbly.
Yeah, a little bubbly at the top. Now that said, and again, I don't want to spend too much time on the gross, because then you have the SOX, which has just been the big uptrend. If I had any complaint right now, it got in the trees. You know, the move is out of the norm. You see it in things like SMCI. I mean, these are out of the norm moves going straight up. And I think they're going to have to go through this process. I don't know if you call it the scare or whatever. And I think it's going to separate the great from the not so great. And one of the things I did this weekend is, okay, we've had this pullback. What are the pretenders? What went along for the ride? And you can tell by how bad they sold them off. Look at IBM in the last 4 days.
Yeah, and Intel.
Intel, which people have been harping on, saying, have you seen their numbers? I look at, when I see this semiconductor, this is the SOX, and then I see Texas Instruments. Whoa. So we're really now, we're really, relative strength wise, we're really now able to separate the big strength from the little strength. But leave no doubt, the S&P is in an uptrend here, in shape. That looks to me about as normal can be. You shouldn't really go from 4,200 to 4,400 in 2 weeks. So you're going to get this normal pullback, and we'll find out in time whether it's more meaningful or not, because, the financials, as I said, I mean, look at these regionals.
Yeah,
Holy
they're
smokes.
going to new lows. I'm for a third drive. In fact,
sure,
I came up with a target of about 28, which would be the COVID lows.
Yeah.
Yeah.
We don't want to see that. So
AMD
again,
was also another weak tech. Really
Yes,
gave a lot of it back. Look at that.
yes.
Yeah.
And volume patterns negative. I look at the bottom also, their earnings stink, and it turned around on the NVIDIA thing, a lot of that. The one thing I will say about AMD, I kind of liked what it did Friday. It got real bearish and then it reversed. The problem is that it's lost relative strength. And what you always really want to do in any group is hang on to the things with the biggest strength. And once this broke right in here, that's problematic. Plus, it got very wide and loose at the top. So I agree. We got bull market, but we also have bear markets in areas, and you just really need to avoid it. This is a time where if you own every sector, you're going to underperform, because there's still plenty of things that are not so great, and you named them. And then in the Dow,
you know what else, Gary, that you just demonstrated? That you could have the right sector, but the wrong stocks in the star sector and not have performance. Like
that's why every night with the semis, I scan about 75, 80 names. And, just so you would know it, but this is a semiconductor stock, Wolf. So you just never know. And that's why you got to you really got to stay very, very focused here, or you can be in pretty big trouble. So the Dow's not in the bull market, and that's because there's some real bad Dow stocks. But the S&P, NASDAQ 100, but not the Russell.
Russell still looks like crap.
Well, it really was hopeful, and maybe it'll resolve itself. But it seems to me that this regional bank at SNL, the Russell may just have a bunch of these things in there, because every time they start getting hit, look what happened here. And the Russell, which really looked like it had a shot here, just shot you a certain finger in the last few days. And that's the end of that for this second. We're always open for changes and things getting better. But man, oh man, that was some pretty last week.
When it comes to rates and yields, you have a view on TLT, Gary?
Well, here's the 10-year. And just leave no doubt, it's tracing out range bound here. And unfortunately, while the 10-year is tracing out range bound, let's make like this is 5.5 up where I draw that red line. That's where Powell's going in higher. And therein lies a worry. Just remember.
But can't we go to 3 first?
On the 10-year?
Yeah.
Sure.
If we start rolling over under 360 and then 3, and that's what it's trying to hold. I don't know.
You got to take this out, and then leave no doubt you got monstrous support over here. But so far it's just trending. And again, I have to bring this up. My worry is, when let me spread this out a little bit here. you know, when I'm going to go weekly. Give me 1 sec. There's your weekly. So here's this. We get this, and Powell's saying inflation's transitory and it's staying at 0. So he was way behind. And again, I'm just worried he's doing the same, but the other way.
Yeah.
And if he misses the mark this way, I'm going to show you 2 charts that, you know how everybody's been calling for a recession, but we haven't had one?
Yes.
Now, I've been saying that until the job market is lost, I don't think we go into recession, but we're going to have just a slow economy. But look at paychecks and ADP. There's paychecks, there's ADP. These are your 2 big payroll companies, and I'm just wondering if they're starting to say, well, they've been saying something, but you get my point. I try to add 1 + 1, and I'm just hoping that this guy doesn't go too far and causes the other way, which means look out job market, look out economy, look out earnings, look out profits, and guess what happens to a decent part of the market? Notwithstanding the AI revolution, who knows where that goes?
Yeah, I'm a hologram today. Anyway.
So I'm always asking myself, okay, you know, just what's going on and a little bit of why. And oh my, whoa, the Nvidia's skyrocketing, but ADP and paychecks, and of course we just avoid these things, but just it's all in the brain right here, because you take out before June 2nd, if they came after the technology, we were going to be in real big trouble. Instead, June 2nd, the caterpillars and deers woke up, but for how long? And even that, they're getting a little bit of pressure here. So I think the big indices are in good shape. The small indices are terrible versus on a relative basis. And I'm just keeping my eyes blazed on what's working. And I've stayed with, I mean, my positions over the last 2-3 months have been Apple, Google, Nvidia, Meta, Oracle, Salesforce.com, JP Morgan, and I handled Oracle, and Microsoft. I handled Oracle and Microsoft terribly. I made money, sold them too quickly right before the Nvidia boom, and what can I tell you? Such is life.
Well, who doesn't do that sometimes?
Oh, yeah.
You know.
Oh, yeah.
But so your contention is that these payroll companies, the reason they're going down is because they're losing business, companies not needing them anymore.
I'm always looking for the word, what's a harbinger? What is something telling me? And I'm just keeping them on notice that everybody's been calling recession for the last 6 months. We haven't had it, but look what the payroll companies are doing. So we'll see. Again,
and yields. And you know, if the yields drop again, I'm thinking, do you see any difference? Like someone that I follow and have interviewed was talking about the spread between high yields and governments. That's starting to widen. First time in last week, first time that could be signaling a period of risk off.
If I just looked at all of that, if I looked at the 2 versus the 10, I'd be like scared out of my wits. But every day there's good stuff. You know, we're just sitting there watching like an MDB that a great gap. And with the NASDAQ dropping here for a few days, it looks poised to break out. So we're sticking all over that one right here. Things like Uber, just nice little drift higher. By the way, we also own the ITB, the home builders.
They've been on fire.
Yeah, and I'm like, wait a minute, hold on a second here. You know, if we're going into big recession, what's with the home builders? And maybe that's the lower rates. And I live for things like this home builders where they just drift slowly but surely along moving averages. But of course, we watch everything. So there's definitely things out there. DraftKings. This is besides the, you know, the big Facebooks and Apples and all that. So there's still plenty. I don't know if you spoke about this Celsius. I mean, there's some good looking stuff in here. Netflix on the normal.
I didn't like the DraftKings chart you just showed.
Pardon?
I didn't like the DraftKings chart.
I have one issue. It's trading back and forth, back and forth. If it breaks the green, it's over. If it tightens up and moves out, that'll be another story.
Yeah.
I get where you're coming from
Yeah,
on
you
the
got a
way.
3 drive. You got your first, it's a 3 drive. I know you don't follow RSI, but you do follow relative strength ranking, but to me, it looks like distribution up there.
Yeah.
I could be wrong, but
we'll see.
Yeah.
We'll see. It's not wrong or right. You will see. Netflix normal pullback here. Tesla gets a downgrade today. That's just normal pullback right now. So there is just definitely things to exploit if we don't get serious distribution. If we don't start to see these semis roll over. So just again, I can't help but say it's one of the great tales of two cities where I can show you. Look at the utilities, which normally with interest rates down, maybe going down would do better. The staples, blah. I can go into the BHPs and Rios that just rolled over badly after trying to break above range. And that's what we mean by I'm worried that this June 2nd emergence may be over because they're so easy to sell them down. We'll see. All I can tell you is we come into this week, for me, it's the big tech and some tech underneath. The one I didn't buy, which I'm PO'd, is Palo Alto. Look at the strength of some of these things.
Yeah.
So I just tell your viewers and listeners, stay very focused. Do not settle right here for things that are not working, because it really is. The institutions are coming out of this, Bank America, and going into other things.
Apple.
Amazon looks ready to continue higher. Thursday, they were just in it, and it pulled back Friday because of the NASDAQ down. So again, this is where I'm sticking, and if that changes, then we'll be talking.
Okay, Gary. So last takeaway that you want to say, we have my takeaway from you is we have bifurcation in the market, that what's been leading, stick with it. Big tech, the indices still look okay. Avoid things like financials. I'm surprised I hadn't looked at a utility chart. That was pretty interesting. And they were railing when rates were going up, and now they're coming off. So
Very
I think
weird.
They don't act like they used to. You think they could have, maybe they have credit issues like the banks. Maybe they own all those long dated mature. Maybe they got caught in the duration game too.
And when you see, look, all I know is that you had to go past the 10-year to make more than 0.5% for a long while. So who knows what's out there? I think the office situation, I think New York is 50% full, and we're hearing about, they're giving away buildings in San Francisco for, 20 cents on the dollar. That's out there. Anything's possible. But for me, I just stick, every night we scan 1,500 to 2,000 names, 200 sectors, every country, and just stay focused. And when wrong, be wrong fast and be wrong small. And don't do what I did with Oracle and Microsoft and cut off leaders too quick. The good news, I have some others that we didn't, and they're working. But I can't help but say there's a lot of bull market talk, but underneath the surface, there's some things to be watched, as I showed a few of them, and we'll see.
Hey, Gary, let go of those trades. You're still commiserating over it. It's just next. And you know what? You can't expect perfection at the crap table.
Let me do one more, if you don't mind.
Yeah, go ahead. Yeah, sure.
I don't know if they reported yet this morning, but look at these cruise lines. This Carnival. Royal Caribbean broke out at 81, is already 97. Here's NCLH. So whatever's going on with the cruise lines, I think they're finally playing catch up. They're still, look how far down from before COVID. So just want to throw that out as a good area at this juncture, and we'll see what happens.
Anything in natural gas, it's starting to come out of the hold, or any natural gas issues that look good to you?
Friday. Good volume patterns at the lows. It kind of 3 steps down, and just notice, here's your downtrend. Just so this, notice how it's flattened out now.
Yeah.
And that's
saucer
how
bottom.
that's how bear markets potentially bottom. By the way, we had mentioned, I hate this thing. Hold on. There you go. I had mentioned this to my peeps when it went to 772, and then it just tucked its head in like a frightened turtle again. But it looks like it moved through 772. That thing could get $10 before you say boo. So yeah, great one. Great eye on that one. And that's on my screen.
Well, you know what they say about bottoms, and markets bottom in silence and top with violence.
And nobody's talking about this. I will tell you that.
Okay. Well, Gary, got a great review. Best way for people to follow you, I know, at Gary Kaltman on Twitter, and any
At Gary
website.
Kaltbaum. It's a bomb, not a man.
Bomb.
B-A-U-M.
Okay, you're a bomb. Okay, you're a bomb. It's Monday morning. I apologize. And to catch your radio show. And
GaryK.com. We post it there and we post it on Twitter. We usually about 5 p.m. every night.
And you could catch Gary on Fox Business every once in a while. Do you have a regular schedule or just when they call you?
It's pretty much every day. I'll be on today, Fox Business 2 p.m. But I have 3 or 4 days a week where I'm definitive, and then I roam around whenever they ask, and it's a blast.
Yeah. All right. Well, you're a blast to talk to every time, Gary. I always look forward to it, and everyone feels your passion for what you do. And you brought us a lot of great looks. So I appreciate you edifying the FACE community.
May I just ask you what you think's going on with the VIX while I have you?
Yeah, sure. It's not broken. I'll just say that.
Okay.
All
right.
How about this? Buy straw hats in the winter.
Okay.
Ever hear that one?
All right. I've heard of, yes.
All right.
Okay.
All right,
you,
Gary,
sir. Gary
Kaltbaum. Gary Kaltbaum, and follow him at Gary Kaltbaum on Twitter, and check him out on Fox and his daily radio show. This guy works hard for he's an RIA. He works hard for his people, and you could tell that, he's on top of what's happening in many sectors. So
and
thanks
it still
again.
Ain't easy.
Thanks, my trading warrior brothers. I appreciate it. All right.
Bye-bye.
All right, so that's a wrap today, guys. Steve ended the interview 3 minutes early. Hope that's okay. And we can join the team in, let's see, 18 minutes for the morning edge, so that you get the edge. And I want to thank everyone for, their attention, and see you for Turnaround Tuesday. Don't just count your pips, count your blessings, and see everyone tomorrow. Adios.